Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Friday afternoon, we have Mark Marex, product development specialist with Nasdaq Index Research, to discuss technical update on trends that he's seeing in the Nasdaq-100. Mark, it's great to see you again. Welcome back to Trade Talks.
Thank you, Jill. Great to be back. Thanks for having me.
All right, you got it. And let's take a look at your first chart here, the relative strength index. I know this is an indicator that you watch quite frequently.
Yeah, so I thought I'd do a check-in on technicals because, believe it or not, yesterday we set a new all-time high intraday and closing basis on the Nasdaq-100. Didn't get a lot of media attention, fanfare for once. And really, I just feel like the whole procession to the new high has been very, very quiet. And if you look at this RSI indicator, I think this explains partially why. The two lines I've outlined here, the 70 line, which is usually thought of as like the line you cross when things get overly bullish, overly hot from a momentum perspective. And then the 80 line, which is a really, really kind of high indicator. And you can see over the past year, we've touched 80 on this indicator with the Nasdaq-100, most recently late last summer. Very recently, though, with these new highs being set, it's been a very kind of slow, deliberate grind up. We haven't even crossed 70. So the index is really, I think, partially why it's not getting the attention so much this time around is that it just hasn't been going up as far and as fast as previous times and as other indexes maybe are doing this year.
Yeah, that's a great point, Mark. Let's take a look at your next couple of slides here where we look at short and long-term moving averages.
Yeah, so here we've got the 20-day and the 50-day moving averages. What I've done is I've circled sort of the last couple corrections or close to corrections that we've seen over the last 6 months or so. Again, there was that first one kind of sharp in September of last year. And then a subsequent one in October. You could see we dropped below both of those lines. And same thing in Feb and early March of this year. There was that whole kind of pain trade going of treasury rates going up, people picking up on, tech and large cap growth all of a sudden becoming correlated with treasuries. That trade has really kind of petered out recently. And you can see we've been well above, both moving average indicators for a couple weeks now. Not really running into resistance in terms of anything, from a short-term technical perspective.
And let's also take a look at some options data.
Yeah, sure. So in terms of options, a couple things I like to look at and track here. On the left is the put-call ratio from the SIBO. That measures not just NASDAQ company options, but all U.S. equity options. You can see the trend line there has been really, really steadily kind of downward sloping for a couple years now. A big part of that was retail getting involved last year, buying up a ton of call options, driving the ratio of puts to calls quite a bit lower. But where I've circled there in the red is you can kind of see it's starting to angle upward. It's starting to maybe revert back to at least a longer term average. There's been some kind of anecdotal evidence that the retail call buying with the economy reopening has really kind of slowed down. So that's an interesting kind of technical thing that we're going to keep our eyes on and see if that starts to impact, in terms of technical trading in the market. Is that going to turn directionally what's been happening over the last couple of months around? On the right-hand side, that's the Vol Q. That's a pretty recently launched volatility index for the Nasdaq-100. I've outlined the 20 line. You can see for a very long time we've been well above that 20, have come close to touching it a couple times in the last year. We finally dropped below 20 this week. So just another kind of supportive measure. Unlike last year where we were setting a lot of new highs, the volatility was still pretty elevated for this index. Not the case this time around. So both from a momentum and from a volatility perspective, the readings are quite a bit lower with this new record being set this week.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.